Best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:27 a.m. Central Time, and I'm recording this in preparation for the market day of June the 2nd, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive in and see just what's going on with overnight. Let's see. Well, just a teeny bit of weakness at the time of this cut. Two of the markets could be called scratch. The ES is down just a little bit at 0.17%. The Russell down about 1/3% for the most bearish of the four broad market indices. Crude oil up nicely at 1.3%. Euro up almost 1%. Let's see, bonds down about 0.5%, and gold down, gold up about 0.21%. In overseas action, China continues to be hot, up 1.69%, though Hong Kong going the other direction, down about 0.5%. Japan down just a scratch plus, and then Germany down about 0.67%, and United Kingdom down about 0.5%. So Europe not doing so well. Basically down about 0.5%. In terms of macroeconomic reports for today, we've got a fairly light load. Let's see if there's anything. Factory orders is the only orange or red flag report for the United States. That's about it. In terms of tomorrow, we have non-farm employment change, trade balance, and ISM non-manufacturing PMI, as well as the usual Wednesday crude oil inventory. So more action on the table for tomorrow. In terms of volatility, obviously yesterday was a very, very quiet day. Short-term volatility at a 13.85, and then IVs, you see 23, 13, 22. Only the Dow is out of the top, or I should say bottom third, in terms of IV percentiles. No standard deviation moves were put in yesterday on any of the broad market indices. We still see this relatively low action on the S&P, with only about half the normal standard deviation moving days that we would see in a 2-week period. So pretty quiet. Certainly yesterday did nothing to give fuel to the bulls or the bears. Really settled nothing at all. In terms of the regular daily report, we still maintain a phase 3 higher high, higher low, intermediate term phase opinion. The portfolio posture is, with the IBD status, confirmed uptrend, and GMI index moved up a notch to 6 out of 6. That is in contrast, though, to the intermediate term market posture, which is bearish. You have the S&P bearish, Dow bearish, Russell bearish. Only the NASDAQ has been holding on into a very bullish kind of stance. So quite a bit of weakness coming from those indicators. Our hedge warning status remains at 0+, and this actually marks the 12th consecutive trading day in which we've had a 0+ or 0 level on our hedge warning status in 2015. And why that is notable is we've only had a string of 12 trading days as our longest session of this level of warning in 2015. All previous uptrends, confirmed uptrends, all previous 0+ levels have failed by this point of its run. I think we had something like a 2-day run, a 12-day run, like a 4 or 5-day run, and now this one at 12. We've had very, very poor follow-through action on bullish phases so far in 2015. So we'll see how well this one holds up, and if we can get any legs to this this particular run, as well as whether that run can actually follow through and gain anything. If you're a core portfolio trader, long only, you've been a very frustrated puppy most of this year because you've seen nothing really accomplished. I think the S&P as of the end of the month was up less than 3%, and it seemed like you have gone just sideways most of that time. And there are reasons for this 0 plus, this normal with cautionary aspects. We still have a number of warnings in place. Volatility based, we still have market in decline and sharp increase warnings flagging. We still have that VIX daily squeeze flagging. Well, we have distribution day count is 2 on the S&P, NASDAQ at a 3. That is, certainly not a warning. We don't get terribly excited until we see 4s and 5s, but at the same time, we don't seem to be able to put in any kind of real run on our bull runs without running into trouble. So we'll watch to see how these distribution day counts add up. We have also in our market posture, obviously bearish. Look at this New York Stock Exchange new high, new low. 384 on the new low. That's definitely a warning. And then on the intermarket risk aversion indicators, you got 3 out of 5 that are flagging risk off. No change in our option income strategies opinion. Still within the acceptable window. Just got to keep in mind increased volatility. We don't have any change either on the covered call strategy opinion. Still bullish, calling for a 3-to-2 distribution between in the money and out of the money strikes. And also the same on put selling. Just measure that position size, consider that defined risk until we get something with a more of a confirmed breakout from this trading range in which you might take more normal approaches to your put selling. In terms of our sector specific, pretty much Christmas tree, we do have healthcare and technology showing more consistency, but if we had any weakness at all, you'd see these flagged down to red as well, because most of these lines are very, very flat, and any kind of bullishness kind of pops them into green, and any kind of bearishness pops them back into red. There's very little separation really right now. Sector market posture, percent change. You see we did have a little bit better day, but these aren't super impressive numbers, but certainly they are primarily green, and that certainly is welcome. So that should be enough for today. Not a lot of change came into the marketplace based on yesterday's price action. That's kind of where we are. As always, if you find what we're doing helpful, just hit the like on the YouTube. And of course, if you have comments or feedback that you'd like to send to us, you can always send us an email. We would greatly appreciate that. More information about what we do is available on the website as indicated here. There's your support@falconglobaltraders.com email address. Disclaimers as always. Hit the pause button if you need more time to review this. And we'll see you back here tomorrow morning before the market opens with our market preview. Thank you.